Hello and welcome to the latest episode of Damien's Midweek Markets, the show where I talk about what's been going on in investment markets and what to look out for in the days and weeks ahead. Now, at the start of last week's show, you may recall that I made a joke about buses, that you wait for ages for one and then two come along at once. And I actually related that to the US election and the Pfizer vaccine news. So two pieces of good news. Well, it seems that you can use the same joke and apply it to vaccines themselves, because obviously we had the Pfizer vaccine that was announced on the 9th of November to the world, which actually caused a rotation in stock markets and assets. Well, this week we had another vaccine, this time from Moderna, that was announced. But what was interesting is that they claimed that theirs was 95% effective, which compares to 90% for Pfizer. Days later, Pfizer have come out and said, actually, no, ours is 95% effective as well. So we're having a bit of a competition. But the point is, we've had more good news on the vaccine front. And now, if you recall, last week, the vaccine trade saw some violent rotations from tech to cyclicals, from growth stocks to value stocks. We saw US Treasury and gilt yields rally higher, meaning that their actual prices fell. We saw things like the FTSE 100 that's been unloved all year and has actually lagged start to outperform. Now, it's worth taking stock of where we are at this point in time. We've had two pieces of great vaccine news. It seems like a vaccine could be started to be rolled out, at least somewhere in the world, in December. There are still issues about the transportation of the vaccine, but also getting people to take it, because there has been some research to suggest that in America, the majority of the population might not actually take the vaccine when it's actually produced on large scale. But if we look at the Dow Jones, for example, this is where you get your stock app out. So if you go and look at your Dow Jones index on your stock app on your phone, you will see that it's up around about 5.5% since the 9th of November. So it's when we had the first piece of good vaccine news. Compare that to the Nasdaq 100, which is the tech heavy index. That's down about 1%. Now, if you compare that to the all-time highs, we saw a new all-time high in the Dow Jones Industrial Average this week. And the Nasdaq, by comparison, is down around about 3 to 4% from its high in September. So you can see that rotation from tech stocks to stocks that are more economically sensitive. If you go and look at some of the indices that are out there, these are sector-specific indices that relate to America. They're very useful to put on your stock app because they can be transferred. The lessons you learn can be transferred across to the UK, for example. So if you type in XLE, which is an ETF that follows the energy stocks in the US, that is up 26% since the first vaccine announcement by Pfizer. We've got the financials. All of these things are very economically sensitive. That's up 11%. If you look at XLK, which is more along the lines of the communications and technology stocks, that's up, well, it's flat, it's 0%. If you look geographically, we've got the FTSE 100 up around about 8% since that first vaccine news versus the S&P 500, which is up around about 3%. If you go and look at the capitalization of stocks, so the small caps, so remember I talked about last week that smaller caps, a lot of those are more tied, their fortunes are tied to the fortunes of the economy, where some of the large cap stocks, take the FTSE 100 for example, a lot of their earnings, around about 70% of their earnings come from overseas. So if you delve down into, say, the FTSE 250, then those companies are much more exposed to the fortunes of the UK economy. So if you look at the FTSE 250, for example, up around about 9.93%, call it 10%, since that vaccine news. And I say the FTSE 100 is up around about 8%. If you look at America, you've got the same pattern. The Russell 2000 is up 9.44%. So you can see these rotations have been happening. And keep an eye on all of those, because going forward, when you want to see whether this vaccine trade is continual, whether we're seeing this rotation escalate or retrace its steps, those are the indices that are very good to quickly look at when you open your stock app to see, is today a vaccine trade day or not? How are we seeing some reversal? And the reason I point this out is because if you now look at each of those indices that I mentioned, you will see that After the initial Pfizer announcement, so going back to November the 9th, you will see that there was a big spike, let's say in the S&P 500. Then as the week has gone on, we've seen a new all-time high on the S&P 500. But the market's response has started to peter out. We've seen days where the market has started to pull back slightly. Then when you take into account the Moderna news, so their vaccine, you might think you'd get a similar response to what we saw on the first vaccine announcement. We didn't. We saw a bit of an uptick, but then the market started to pull back. And even when Pfizer said that their vaccine is actually as good as Moderna's vaccine at 95% efficiency, you think that'd be more good news. The reaction from the market, again, was barely noticeable. And if you skip across to the bond market, what is interesting about the bond market, particularly the 10-year US Treasury yield, and have a look at the 10-year gilt yield. On the 10-year US Treasury yield, it rallied to about 0.9% in the aftermath of that first vaccine announcement. It's a huge rally. If you held on to long-term treasuries, that would have been quite painful in your portfolio. And equally, the 10-year UK gilt yield rallied to about 0.4%. If you look where they are at the moment, they've pulled back a bit. They're largely still where they were after that initial announcement of Pfizer. A bit lower. They're actually still elevated from the point they were pre any vaccine news, but they've started to pull back. It suggests that perhaps the bond market isn't as convinced about the vaccine. Not that it will come, but that we will see it rolled out widely as soon as people hope, and actually the impact or the positive impact on the economy globally will be as marked as soon. So it's very interesting to watch, because we've got the stock market, all good news, all at new all-time highs on the S&P 500 and the Dow Jones Industrial Average. The FTSE is rallying. It almost feels like the market, where's the rest of the good news going to come from? Because don't forget, we're still seeing record coronavirus cases around the world. We're still seeing lockdowns escalate in different countries. We are still in a lockdown. We've even seen central banks coming out and saying that the world and the economy is going to get worse before it gets better. So depending on when we get this vaccine and the impact that it has, whether it actually proves effective at getting rid of the coronavirus more widely and allowing us to not have these lockdowns in 2021, depending on how effective it is, that will depend on what will happen to companies' earnings. And of course, the stock market is basically a pricing mechanism for future company earnings. So there is two schools of thought. People are thinking that that's it. The vaccine trade is here to stay and it's going to escalate. We've not really seen that. It's still bubbling along, but not quite as aggressively. And there are people who think that this actually has been overdone and we could see a reversal going forward. Of course, we have got the seasonality factor coming in. So December tends to be a good month for stock markets. Call it the Santa rally. People will probably be talking about that in the coming weeks. So that is possibly one tailwind for stock markets, because there are people thinking, well, what else is there that could push markets higher? Aren't we just due a bit of a pullback, given that the COVID situation is still pretty dire? I mean, if you think about it, the US election result is obviously now known, but Donald Trump seems to be permanently on a golf course. The likelihood of some sort of intervention from the US government in terms of fiscal stimulus is probably reduced. And also the Fed, the US Federal Reserve, is deemed perhaps less likely to intervene in markets now that we have the vaccine news. We've got to wait and see. Of course, markets like fiscal and monetary stimulus. It's probably the most likely thing to push the market higher. Whenever the Fed balance sheet slightly shrinks, we tend to see the market pull back. So at the moment, we've had the rotation. It's seemingly bubbling along, not as aggressively. We've got to see what happens from here, because the market is almost getting immune to the vaccine news. So that is it for this week on Damien's Midweek Markets. As ever, you can contact me via email, damien@moneytothemasses.com. Twitter is money2themasses with the number 2. You can find me on Instagram, Facebook. Join our Facebook group, facebook.com/groups/money to the masses. And of course, do subscribe to our YouTube channel. But before you go, I forgot to mention that in just over a week's time, we are going to be doing a live ethical investing event. So I've got Alice Ross from the Financial Times talking about climate investing, and Moira O'Neill from Interactive Investor giving us her insights on the ethical investments out there for the general public. So it's going to be an interesting event. It runs for 1 hour, and that's going to be in Monday week. So that's Monday the 30th of November at 7:30 p.m. You can find out more details by following us on our socials, and of course subscribe to our newsletter. So until next time.